Alright YouTube, Stocks by the Numbers, welcome back, coming to you with another smaller cap company here that might be worth keeping an eye on down the road. Name of the company we're talking about, Presto Automation, ticker symbol PRST, listed here on the NASDAQ. Stock right now, $1.76 a share, up 10 cents today, having a nice little 6% pop, and recently the stock was north of $3 a share, and just over the course of the last couple of weeks here, the stock has completely dropped down to the low ones and now had a little bit of a bounce. So this company, AI, sound, voice, AI, tech software stock, very similar to SoundHound, and this company actually had an agreement, as we see here, to roll out their technology across some Carl's Jr. locations. And that obviously is a very good sign. Not seeing any financials disclosed in these news articles here, so for all we know, again, not to bash the company, but, $6.6 million in the quarter, for all we know, that deal may only be worth a couple of $1 million. But again, at the end of the day, when you're talking about a newer, smaller company bringing new technology to the table, we are now in the state of infancy, right? So they're spreading out, they're trying to showcase their technology. They probably got a bunch of people cold calling all these other fast food franchises, and they're trying to implement their software, their technology into the drive-thrus to try to, increase their time efficiency or their production efficiency. But very similar to what we saw with SoundHound getting that deal recently with White Castle, again, we have something, Presto Automation, working with Carl's Jr. So the real question is the stock worth $1.76 now? Could it potentially go higher, or could it go lower? Now, here it's showing about $6 million for the quarter here, with losses of 19 cents a share. These numbers are coming out today after the close in about 2 hours. So again, I know I'm coming to you a little late with this stock. However, in my opinion, I would have personally waited for this report anyway. Even on this way down here, as it was, $2 a share, I still would have seen these earnings coming up, and I would have waited to hear what they have to say, because I believe they're also potentially giving out full year guidance as well on this conference call. So I think we're going to have much, much more of a clearer picture on Presto Automation after the close here. And of course, I understand we could potentially have a pop, and then you're going to say, I wish I got in. But again, the way the stock has been trading, we had this gap down here. We're looking at what? Yeah, maybe like 228. And, that's what I mean. You're talking about 50 cents on $1.76, so this is like a 30% move potentially that could take place. So that's why even if they come out with good news and the stock immediately jumps to like 196, it's like, you're better off getting in at 196 and riding a wave for 30 or 50 cents real quick, as opposed to forcing your way in here at $1.70, and then all of a sudden the company comes out with bad news and it drops back down to $1.30 first before, taking a couple of months to get back up above 2. So this is why in these situations I would always remain patient, because the proof is in the pudding and numbers do not lie. So I understand the hype behind it, and of course they recently signed a deal there with Carl's Jr. However, again, you can tell that wasn't a huge positive catalyst, believe it or not, for the stock. As you see here, the 27th right here, stock, look at this, as high as 285, and then supposedly they signed this deal with Carl's Jr., and the stock drops down to 135, right? So on hearing that news at 280 a share, if you jumped in, you actually immediately lost 50% in value. Reason being, again, is because that is when the markets really chunk down there at the end of September, coming into October. In my opinion, now we're seeing a little bit of life this week, because I guess people are looking at, the war times overseas in the Middle East now, and in the immediate short term, we're looking at it as a positive, not necessarily as a negative. In my opinion, I think it is a negative, and certain things, like we saw oil yesterday with a 4% pop, and today, as you see, it's slightly red, down about a quarter per barrel. And in my opinion, that's BS. I think oil, gold, and silver are going to continue to climb, regardless of what they're trying to do here in the immediate short term. And of course, on the flip side, even though we're seeing green today and yesterday, Monday, we were up as well, I just want to keep reminding people, just remember, not too long ago, the United States got a credit downgrade, and of course, a handful of banks got downgraded as well. So, again, we could see an immediate short-term little rally here, but overall, in my opinion, I am still betting against these weak markets, and the Dow, in my opinion, should drop back down to like 30K. So, but again, that's just my opinion, just an overall broad picture here. But anyway, getting back to Presto Automation here. So right now we have a market cap of about 100 million, and I know a lot of people want to know, is that fair value? Should they wait? Should they step in? Again, we come down here, we can see only a couple of million coming in for these quarters here. So even with the losses, technically you could say maybe that the stock is fair value, just like we mentioned with D-Wave Quantum in the previous video. You could say fair value for a lot of these newer companies, maybe 80 million, 100 million, 150 million. So this is why, this could be kind of near the bottom. And of course it hit 120, 123 was the low. So of course the company could take another massive hit here and bring this market cap down to like 60, 70 million. But, let's see what's going on in the numbers here. Again, across the board, we're just seeing a lot of bleeding, and of course, losses are outweighing revenue and income being brought in, which is never really a good sign. And of course, more importantly, looking at the last couple of quarters here, we can see that liabilities are now outweighing assets. And again, assets minus liabilities yields the total equity in the company. And we can see here that the company has negative equity, just like D-Wave Quantum, and of course, holding tens of millions in debt. So if we come down here, we can see that now with liabilities outweighing assets, we are sitting here with a negative book value, meaning that this stock can literally drop 50, 60, 80% from this level, and unfortunately, it would actually be justified. So this is a company now where what you're doing is you're expecting good long-term growth with new longer-term clients, but all you're trying to do now is position yourself at a good price. And unfortunately, again, the numbers are against the stock. Here you can see like this information isn't even really being updated here on TradingView, so might have to dig a little deeper and go to some other places here to try to find some numbers. But the operating margin here, the EBITDA, again, earnings before interest, taxes, depreciation, amortization, one of the main metrics that a lot of people use, the EBITDA. And you can see here that over the last several quarters, operating margin, EBITDA, and net margin percentage have all been increasing to the downside, which of course is not a good sign. But again, the company just started to do business with Carl's Jr., right? So this is what I'm saying. It's like they're expecting bigger and better things, as you see here, somehow only increasing exactly 1 million quarter over quarter. This is why sometimes with a lot of these newer, smaller cap companies, I actually question the information that they're freaking showing me, right? Who would move? How would your revenue move exactly 1 million quarter over? Look at this, 9.6, 10.6, 11.6. What business runs like that? What business has that kind of reaction? But anyway, either way, as we see here, again, today, after the close in about 90 minutes, we're definitely going to have more of a clearer picture. So this is why it's kind of rough for me, because in the numbers, it does kind of look like crap, and I'm almost ready to bash the company. However, in the next 2 hours, the company could say something that can just, completely reignite the hype behind it. And, of course, all of a sudden we can start rallying and the stock can get back to $2.5, $3 a share, right? So, unfortunately, I'm kind of looking at like half a situation here. But I will say, even though we do have slight increases here quarter over quarter, it is increasing, right? So the fact that we go from like this 6, 7 million level to almost 10, to north of 10, almost 12, almost 13, these are good signs. However, again, with the losses, as we see here, losses significantly outweighing the revenue coming in some cases almost 3 to 1, we know that it's going to take quite some time for this company to quote-unquote right the ship, so to speak, and really get back on track. So chances are, based on these numbers I'm looking at, this company needs to start bringing in like 20, 30 million a quarter for them to actually feel it. and kind of benefit from it. And as we see, just kind of going through 2024, if these numbers are accurate, the company more than likely will continue to struggle going throughout 2024. We can't look at annual projections. Apparently, there's nothing here on the EPS side either. But chances are, in my opinion, this, of course, is going to be a longer play. And like I said, even with the Carl's Jr., for all we know, that whole deal might be worth like $5 million, which, again, as we see here looking at the numbers, is not going to be a huge impact to Presto Automation's bottom line. However, again, you know, a lot of business is also word-of-mouth business and reference business. So all they need to do is really showcase their efficiency to Carl's Jr. to where at the end of this little test run, you know, Carl's Jr. is saying, hey, listen, at the end of the day, you know, sales did go up, random fire truck going by, but again, you need Carl's Jr. to actually come out and speak positively about this company's software and about their technology that they bring to the table. That's going to open the floodgates. You understand? And then even if no one immediately signs with them after that news, it's the fact that it actually works and could be potentially, quote unquote, like sought after. Then we're potentially talking about something pretty massive. And then what's going to happen is if you get a positive catalyst like that from actually one of the clientele, what's going to happen is that will immediately, in my opinion, explode that stock, right? So even hypothetically right now, let's just say we fast forward like 6, 9, 12 months from today and nothing really happened and this stock's still at $1.76, right? All of a sudden, Carl's Jr. comes out and says, hey, man, look at this data over the last 9, 12 months. You know, efficiency is up, productivity is up, profits are up, sales are up. Like, if everything across the board is now more positive because of Presto Automation's technology, the stock is probably going to double on that news. And you can immediately go from like $1.70 back up to north of $3 just because of that one positive catalyst announcement. So this company now, of course, needs more clients, but of course they need Carl's Jr. to actually come out and say, hey, listen, you know, that was a great decision that we made to utilize your technology, and now it's really paying off in spades. But again, here, looking at the income statement, it is all negative. We have liabilities, again, outweighing assets. We're holding tens of millions in debt. We have a negative book value per share. So unfortunately, I know a bunch of people are in this one, but even now, like taking a 50% haircut is actually feasible in my opinion. But more importantly, again, you can see going from this low here, the new 52-week low, $1.23, this was back April 13th of this year. And now recently, right, we had the crash. They cratered the stock from north of 3. They brought it down to $1.35. And then it had that big bounce, as you see, up to almost $1.95. So if this, like 125, 135, so if this is now, quote unquote, the bottom, as you see here, yes, percentage-wise, yeah, you can have like a 20, 25% drop from this level and you can retest these bottoms. However, of course, you know, you're 40, 50 cents away from the bottom, but of course your upside is potentially unlimited, right? So even over the years, if this can get back to the SPAC level of 10, obviously percentage-wise from this level, that would be a massive return for you and your portfolio. And of course, hypothetically, if we're saying the low is $1.20, $1.30, you know, you're again risking, you have a small risk per share compared to the long-term reward that can happen here, right? So that's why even though it recently took a hit, like this may actually be a pretty good sign here. As of late, it looked like it formed the symmetrical triangle. Yeah, and you can see it broke down and dropped and retested that trend line, and now it bounced, but now it's sitting above the 20-day moving average, which actually is kind of a decent sign. Let me look at some of these fib levels here. We're looking, what's that, 183. It's a 3-month chart. Yeah, this is it. What's that, 6-month chart? So we're looking at a 6-month chart here, and you can see how when it broke down, the whole time it is now still below this 20-day moving average. So you're going to need this to like come down and meet up with the stock. And now this moving average is going to be like your new support level. So if it closes above that moving average, it could potentially be viewed as in a bullish trend, and it can get back above $2+. On the flip side, of course, it could rally and meet up here at this fib and then reject off the moving average and drop down. But again, in the immediate short term, it's going to be more about this call here that happens after the close. But right here, looking at the 1-year chart here, you can see again 125, 135. So technically we made higher lows, and this drawing this trend line connecting these two bottoms here of the candles. Now this is your support level, this blue trend line going across. So now if we drop here, hypothetically, let's say immediately, you're looking at like $1.38, maybe like $1.40 over here, and that could potentially be the low where it bounces off of that level, which, in my opinion, even though there may potentially not be a lot of business going on and no real revenue taking place, if this does drop down to like $1.40 here at this line over the next couple of weeks, and then we have the bounce back into the 170s and the 180s, that would actually be a good sign technically, because now that would be a higher low from a higher low from a higher low. Do you understand? So if it actually does do that, in my opinion, that would be a really good sign. But again, in the numbers, it does look kind of rough. This is a newer tech company, and obviously it's going to take some time. However, here, like in the low ones, or potentially if it does happen to break one, of course, I would be, more inclined to be a buyer. But again, like I say, most of these companies, Wall Street will try to maintain like maybe 100 million, couple of 100 million market cap. So sometimes it's worth it for a situation like this to just look at the actual market capitalization and look at what Wall Street is valuing the company. And again, I understand that liabilities are outweighing assets. However, now that they're actually rolling out the technology and they signed the deal with Carl's Jr., again, it's going to take some time to get some of that data back. But the question is, like with the company in its current state and the fact that they just signed the deal with Carl's Jr., the real question you ask yourself is this company worth at least 100 million or more? And again, unfortunately, I think today's phone call is going to kind of give us a little bit of a clearer picture. But again, if the average company you want to say is worth like a couple of 100 million with the IP they have on the back burner, it's like, yeah, it might be worth rolling the dice and risking some shares of Presto here with a $100 million valuation, right? Because again, in the short term, it could get rocky and it could take, several months for the stock to really turn around and start growing for you. But, think about it down the road. If 2-3 years from now, the company could be worth, $1.5 billion, $2 billion. It's like, well, right now you're getting it for $100 million, right? So if we turn around in 3 years and this is a $1.5 billion company, you just made 14 times your money, right? So that's why, again, it's worth it to look at the bigger picture. This is a company, of course, that, does have these potential swings and pops. So you could, wait for a bottom here at $1.40 and then try to trade it and flip it when it gets up to $1.90, $2. I can totally appreciate the fact if a lot of you are trading this. However, again, in the immediate short term, I feel, in my opinion, it would be a little too difficult to actually try to trade this. And I personally would just wait for them to kind of beat it up, get near that rock bottom price, and then I would lean in fully and scoop up all these shares, at some like $60 million valuation or something like that. Like, you understand what I'm saying? Because if they do actually start to sign with more and more of these franchises, then then the sky's the limit. And of course, the value of the deals would consistently increase over time. Because, of course, they're, more of a name in the space and there's more demand for the technology and so on and so forth. So, again, But when we look at the fundamentals here, unfortunately, we kind of have like half a picture. And again, to reiterate, we have this call today after the close, and that, in my opinion, random ad, is what I would keep an eye on. But we'll switch over here to stock charts very quickly, and you can see again the RSI completely went into the crapper there as of late, but it looks like the MACD has potentially flattened out and may be getting ready for the curl, but it's going to be today's phone call that's going to dictate future movement. And right here, the RSI down at 31.5, so we still have a lot of room to go. And that's why if the company does say something positive somehow on this conference call, you can quite literally see a massive explosion here of like 30% and have the stock get back up to like this mid-Bollinger Band level here of around 2.5. Definitely possible in my opinion. That's the one good thing about, you know, buying and selling a lot of these smaller cap stocks, because they do really swing. They really do. You know, you can see the big candles up, and you can also see those big drops down. So, you know, anything can happen. But here, the RSI on the weekly, 38 3/4 about, definitely has more room to run. Does look like it's in a downtrend, though, going back to those highs in June. But MACD's been slipping as well. However, it was this big. It was this big drop right here that, in my opinion, kind of messed up a lot of these technical indicators. But still, I say it really all comes down to the phone call, where we're just kind of shooting in the dark here, in my opinion. 289, that might be a massive level. And again, something like this, the way they crashed it down, looking at the fundamentals, I mean, you know, maybe they could explode it back up to like 289 and like get back to that level, but chances are it'll reject. But of course, it really does all come back down to that phone call. I know that's not what you guys want to hear, but with the company in its current state, that is more important than we may want it to be. So, unfortunately, I would also be in wait-and-see mode with Presto, just like D-Wave Quantum. And I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And, of course, subscribe to the channel. That is our handshake agreement. I will do updates on these small cap stocks. I'll look at larger companies like Disney. If you want, Discord link in the description of every video. Strongly advise you guys, in my opinion, to come into the Discord. Been making some pretty decent calls there in the short term, so you make a couple of bucks for yourself. I will do all of that for you guys. All I ask, do me a favor, push the subscribe button. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and they're volatile and they're very uncertain. So I wish all of you success. Hope everyone makes a couple of dollars. Thanks for stopping by. I'll catch you guys in the next one.